Hi everyone, my name is Robin Speziale and I'm the national best-selling author of a book called Market Masters, Interviews with Canada's Top Investors. So today in this video, I'm going to be sharing how I research growth stocks, how I go about the process and how I decide which companies to invest in. And some of the key metrics, I'll go through a list and then I'll explain an example, are high growth in revenue, high return on equity, and return on capital. I want to see growth in free cash flow per share, growth in book value per share, and then growth in earnings per share. And the example I'll use is Constellation Software. So I discovered Constellation Software years ago, and it was because of the amazing growth that I found in their financials that led me to actually invest in the company, and I've been adding money since in Constellation Software. And one of the best sources that I use is Morningstar. So go to morningstar.com or morningstar.ca and type in Constellation Software on the top, or you can type in CSU.to. Constellation Software is traded on the TSX. And once you get to the page for the company, you click on the tab called Key Stats. I'm on this page now and I'm looking at Constellation Software. And if you look all the way back in 2007, Constellation Software was generating $243 million in revenue, 2007. And then the next year, 2008, 331 million. The next year, 438 million. The next year, 2010, 634 million. So you see that from 2007 to 2010, Constellation Software, their revenue went up 3 times, close to 3 times. And they've been, growing revenue since. So this is number one for me in looking at a growth stock. And then number two, scroll down this page of key stats and take a look at the return on capital and return on equity. So for Constellation Software, you'll see that in 2007, they started with a return on equity, which is net income divided by book value, of 13% return on equity. But then the return on equity actually started going up. The figure went up to 16% 2008, then it was up to 32% 2010, 77% ROE in 2011, and it's been very steady since. It's been in a range from 2012 to now between 35% ROE and all the way up to 60% ROE. And return on equity is one of the best indicators of management's ability to allocate capital, to use shareholders' capital to grow the business. And Constellation Software has done a great job. High ROE and high return on capital. So the third thing is that you want to look for growth in free cash flow, book value, and earnings per share. What's interesting here is the per share metric. So as a shareholder, when you invest in the stock, you have to think, is it worth it for me to own this stock? Am I being diluted? Or does the management actually care about me, the shareholder? In Constellation Software, I'll give you an example. They have not added to their share count since 2007. If you look on their balance sheet, and if you look here at Morningstar, their shares have always been there at 21 million shares in the book. And that hasn't changed. It hasn't gone up, it hasn't gone down. So what that means is that, as they're generating more net income, that year after year, that just translates to higher earnings per share for you, the shareholder. And so I look for growth in, earnings per share. If you go, again, back to Morningstar for Constellation Software, they started off at 52 cents per share, earnings per share. And they grew that all the way up to close to $10 earnings per share in the current year now. Okay, and so that growth is just amazing. That's 20 times growth since 2007, as well as free cash flow per share. They've had amazing growth there. They've gone from $3 in 2008 free cash flow per share all the way up to $30 free cash flow per share, and book value per share, because they haven't been quote unquote printing new shares. Their book value per share has had amazing growth since 2008, when it was at $5.50 per share. Book value per share has gone all the way up to $30 per share. So that's 6 times. So this is the type of growth that you want to look at. So again, when you go to Morningstar, type in a company name, for example, National Beverage or Bell or Apple, and then go to that 10-year table, the key stats, and look at, since 2007 to 2017 now, which is this timeline. Look at the growth in revenue. Look at the growth in net income. Look at the growth of earnings per share. Look at the growth of their shares outstanding. You don't want to see that they're printing or they're issuing more shares over time. The best companies, the best growth companies, in my opinion, are the ones that have a stable share count. They're not going up. But sometimes even better, the companies that are buying back shares. So if you see share count going down year after year, that's a very good sign too. Growth in book value per share, very important. Growth in free cash flow per share, very important as well. Again, and a high return on equity. I like to look for companies that have a 15% or higher return on equity. Return on capital, I like to look for companies with 10% or higher return on equity, and ones that are consistently returning a higher return on equity, and it's not going down over time. And these, the last point I'll make is that these companies like Constellation Software, they'll grow through their own free cash flow from their own cash coming through business, coming through their operations, and they're not expanding through issuing more shares. They're not expanding through taking on too much bank debt. They're not expanding in those ways. They're expanding through their own free cash flow and deploying it in good investment opportunities, earning a high rate of return, which translates to higher net income and higher earnings per share for you, the shareholder. So this is how I research these growth stocks. And if you have any more questions, you can email me back at r.speziale@gmail.com. Or visit my website, robinspeziale.com. You can find some more resources there and also find my email. Thanks, guys. Happy investing.